Good morning, ladies and gentlemen. Welcome to this virtual press conference where BK Group is going to present financial results for the first half of 2024. I would like to appreciate our media partners for honoring our invitation. My name is Audrey. I will be moderating this session. On this call, we have members of BK Executive Management who will take us through the financial performance of the first half of 2024. We have BK Group CEO Dr. Uziel Ndagijimana, Bank of Kigali CEO Dr. Diane Karusisi, and the CFO Anita Umuhire. After their presentation, we're going to have a Q&A session. You can raise your hand and speak, or you can also post your questions in the chat box and I will read them. So without further ado, I'm going to welcome BK Group CEO Dr. Uziel Ndagijimana for his opening remarks.
Thank you, Audrey. Dear members of the media, welcome to this press conference and thank you for joining us. I'm pleased to announce key results of the BK Group for the first half of the year, ending on 30th June 2024. During the period, BK Group achieved a net income of 47.8 billion RWF francs, equivalent to $36.5 million, which is a growth of 29.5% year-on-year. Total assets increased by 10.1% during the period, and shareholders' equity increased by 13%. Net loans and advances increased by 14%, and client balances and deposits increased by 6.5%. This good performance of the group is a result of good management of the group and the good economic environment of Rwanda. The Rwandan economy has continued to grow at high rates and to show resilience to multiple external shocks. Since 2021, after COVID-19, the Rwandan economy grew at 10.9% in 2021, 8.2% in 2022, and 8.2% in 2023. And in the first quarter of this year, 2024, it grew at 9.7%. Inflation has decreased significantly and is currently at 4.9%. That is as of July this year. And the Rwandan franc depreciation has also decreased, and it was around 2% in Q1 2024. I will now ask the CEO of the BK Bank and the CFO of the bank to give you some more details on the financial performance of the bank, which is the main contributor to this good performance. Thank you.
Thank you very much, Dr. Uziel. Indeed, the bank has continued to benefit from very favorable macroeconomic conditions, and the bank has continued to grow. The performance, as Dr. Uziel said, has been quite impressive in the first half of this year. In terms of net interest income for the bank, we've recorded over 89 billion in the first half of this year, which is a growth of about 16% year-on-year. In commission income or net non-interest income, we've recorded revenues of 32 billion, which is a growth of 27.3% year-on-year. So we are quite happy with the performance of the first half, which is in line with our projections as we indicated to the media and to investors months ago. We are very much in line with the performance we expect to have at the end of the year. Something we are quite happy with is the way we've been able to contain our cost escalation, and our costs have only increased by 8% year-on-year. And when you compare how revenues are growing and how costs are growing, you can see that that's the reason why we are able to deliver a very good profit after tax with an increase of 28.2% year on year at 46 billion. This is the performance of the bank only. So in terms of our business, loans, net loans have continued to grow. Year to date, we've recorded a performance of a growth of 14%. Deposits also are growing in a quite competitive environment with the M&A activity as we've seen in the last years. It's a war to get business and to get deposits. So our deposits have grown by 6.2% year to date, which we believe is not as good as we would want to see, but we are trying to contain the cost of funds because it's always a balance. You want deposits, but you also want affordable deposits. And we've managed to contain our cost of funds to cost of funds is about our NIM, our net interest margins. We managed to contain them to 9.3%, which is in line with what we expected and what we had also committed to the media and to investors. So overall, as a bank, we are quite profitable with a return on equity of 27.9%, which is above our usual target of 25%. Our NPL, though, remains a challenge. We still have an NPL rate that is above 5%, which is the risk appetite for the bank, but also the indication that is given by the regulator to the banking industry in Rwanda. So our NPL is at 5.72%, and we have a lot of activity towards the end of the year to try to recover, forcefully recover for those who have not managed to pay. So we are able to reduce this number to below 5%. So what we can say is that we expect to still continue with the growth momentum in the second half of the year. We are anticipating that at the end of the year we'll achieve our targets in terms of growth of loans, but also in terms of profitability. On the main activities, customers from across segments, from the corporate segment, from the SME segment, agribusiness, but also retail. We've recorded very high growth in our SME book, which we believe is very much in line with our diversification objectives. And the nascent agribusiness department that we set up about 2 years ago has also seen a significant growth, close to 70% growth year on year in terms of loan book, but also in terms of interest income and non-interest income. We also are aligning with trends globally and in the region. We are working on our ESG strategy. We already have developed a climate action plan. We want to have this strategy approved by our board in November, and we'll be able to share these news with the media and the community. I think I would let our CFO, Anita, go into the details, in particular, not only of the group performance, but also the bank performance, looking at different segments that we serve. I thank you.
Thank you. Good morning, everyone. I think we've touched on most points, but we'll go into some more detail. As mentioned, the group has recorded a profit of 47.8 billion for the first half of the year, which is a 29.5% year-on-year growth. Our income has been growing at a much faster rate in relation to our expenses at 1.8 times at the group and 2.2 times at the bank. So this combination of growth in business as well as a stronger cost management has resulted in this strong performance that we're sharing. So looking at the different drivers on net interest income, there's an increase of 16.9% year on year on the back of the 14% growth in loans, as mentioned, particularly on overdraft facilities. There's also a notable increase in interest on treasury loans by 4.1 billion year on year. And this is fueled by demand for post-import facilities, especially to oil importers. Interest on assets held to maturity and interest on deposits with banks also grew significantly by 5.3 billion year on year. And this is really powered by strategic investments in government securities and other earning assets. Interest expense rose by 18.9% year on year. And this is from deposit mobilization efforts that has seen an increase, a significant increase in term deposits specifically, consequently raising our cost of fund to 3.3% at the half one. Our net interest margin has dropped by 30 basis points compared to quarter one, and this again is originating from a pressure on the loan yield as well as growing cost of funds. On non-funded income, we recorded 34.8 billion, which is 24.7% higher than the same period last year. Our NFI ratio is overall for the group 27.5%. And this good performance was largely supported by FX-related income that has grown by 70.2% year on year due to a reduced short position at open position, whereby we've seen a significant decrease in revaluation losses while being able to maintain our trading profits. Of course, this was also supported by the improvement that we've seen in depreciation of our currency against the US dollar. So overall, also the market environment has also been very conducive. Loan-related fees and commissions also continue to grow in relation to the growth that we're seeing in the loan book. On operating costs, they grew by 10.4% year on year at the group and 8.4% at the bank, with a cost-to-income ratio of 36.3%. And as mentioned, we've seen very good cost management that has yielded positive results. Personnel costs increased by 19.5% year on year. And this was largely related to some inflation-based increments that happened at the beginning of the year. On depreciation, there's an increase there of 14.6%. And this relates to capitalization of expenditure, mainly related to different branch reworks that were done. Other admin costs have decreased by 2.9% at the bank, as mentioned, due to a number of cost containment measures, but also with the improvement in our currency performance against the US dollar specifically. Loan loss provision year to date, 17.9 billion. And this was taken against distress exposures, however, keeping our cost of risk at 2.2%, as was the case for quarter one, with a relatively flat NPL ratio of 5.7%. Looking at our financial position, total assets at the end of half one are 2.3 trillion for the group. This is a double-digit growth of 10.1% over year to date. This was financed by a growth in client deposits of 6.5% growth to 1.46 trillion year to date. And interbank deposits have also increased by 56 billion, while borrowed funds have increased by almost 13 billion. Net loans are 14%, have seen a 14% increase, driven by, of course, new disbursements, especially of a shorter term nature. We've touched on ROE at 28.3% for the bank, 24.5% for the group, with an ROA of 4.3%. Thank you.
Thank you very much for the presentation. So it's now time for the Q&A. You can raise your hand or you can drop your question in the chat box. So we have Saul Wutera, who has raised his hand. Welcome, Saul. Yes, I can hear you. You can ask your question.
Thank you. Okay. So we expect to continue the trend that we are on at the end of half one, where we've reached at 47.8 billion. So we expect to continue the same trajectory to the end of the year. And our growth will continue to be supported mainly on the expectations we have on our loan book growth, as well as on non-funded income. We expect to continue to do well on FX-related income, but as well as improve overall our performance on loan-related fees that has been a little bit stagnant for the first half, but that we have a number of initiatives, especially on more digital usage of our channels. So we expect that to also improve. So overall, we will maintain this current trajectory. Thank you.
We have a question from Placide Ngirinshuti. He's a journalist from RBA. I'm going to read his question. Mwaramutse neza, nitwa Placide Ngirinshuti, ndi umunyamakuru wa RBA. Turifuza ko mwatubwira mu magambo make ibikubiye muri iyi presentation mwakoze kuri Q2 and first half of 2024 results mu Kinyarwanda.
Bakoze Placide kubaza gusaba ko tuvuga mu ncamake ibyo twavuze mu Cyongereza. Bank Group imaze gutangaza umusaruro wavuye mu bikorwa bitandukanye by'ibigo bigize iyi group mu gihe cy'amezi 6 y'uyu mwaka, kuva mu kwa mbere kujya mu mpera z'ukwezi kwa gatandatu. Bikaba bigaragara ko umusaruro wabaye mwiza, kuko habaye urwunguko rungana na miliyari 47 n'ibice 8 by'amafaranga y'u Rwanda, bingana na miliyoni 36 n'igice z'amadolari. Bikaba bigaragaza umuvuduko ungana na 29 n'ibice 5% ugereranyije n'amezi 6 y'umwaka ushize wa 2023. Umutungo rusange w'ibigo byose bishyize hamwe wazamutse ho 10.1%. Amafaranga inguzanyo zatanzwe ziyongereho 14%, naho amafaranga yabikijwe muri bank yazamutseho 6.5%. Bikaba bigaragaza rero umuvuduko ujyanye nuko n'igenamigambi byarakozwe. Ibi kandi bikaba byarashingiye ku micungire myiza y'ibigo bigize group, ariko nanone bifashijwe nuko n'ubukungu bw'igihugu cyacu bwitwaye neza, aho bwazamutseho 9.7% mu gihembwe cya mbere cy'uyu mwaka, ndetse n'ibipimo bitandukanye by'ubukungu byose bikaba bihagaze neza. Bikaba bitanga icyizere ko kugeza umwaka wa 2024 tuwusoza, n'ubundi urwunguko rwacu ruzakomeza kuba ku gipimo cyo hejuru. Murakoze.
We welcome more questions if they are there. there is a comment from Sol Butera on the chat. Thank you for the comprehensive response, but I was wondering if you could put a figure to it. Do we expect a 30% growth this year compared to 2023?
Yeah, so our expectation is around 25%. Yes, so that's what we're expecting to the growth 2024 versus last year. And we are on the right trajectory to achieve that.
Thank you. Since we don't have any more questions, we are going to get closer to the end. We would like to invite BK Group CEO to give his closing remarks.
Thank you, Audrey. I want to once again to thank our journalists who have responded to our invitation and to share with them our financial results, and we hope that they will be disseminated to the market, and we invite you for the next conference when the new results will be out. I thank you.